Hi guys, let's do a technical analysis video today. So I'm going to try and emulate similarly to Dan, the charting man from the Chart Guys, actually, because he's the master of doing these types of technical analysis videos, but I'm going to give it my attempt to do something similar today because he's one of my biggest inspirations. So let's get right to it here. So looking at the SPX, and we're going to look at the Nasdaq, the Russell, and a few big tech sector names, and a couple of names I just find that are relevant charts right now. There's some other charts too that are relevant, like if you look at the cruise liners, some people like to trade those volatility names, but we're just going to do a basic rundown of some of the big sectors here. So looking at the S&P 500 chart, we're in a daily uptrend, and as long as we remain in a daily uptrend, the bulls are in control. So our last daily higher low was set at 2765.8 here, and we managed to lose the daily uptrend and then regain it. And that's been a popular theme lately, where we see a loss of a trend and then a quick regain of that trend and then a slow grind up and squeeze out shorts who were thinking that we were going to get follow through in that direction. So in my opinion, as long as we hold this pivot on the daily chart, the S&Ps are still in a daily uptrend. All right, if you look at the weekly, we are looking for some sort of weekly lower high to form, and in my opinion, if you look at this long-term chart, it seems pretty apparent that based on the size of the drop and the size of the bounce, that the more likely scenario seems to be a trading range, a longer term trading range. So when you zoom out, you can definitely get a better perspective of that. Okay, you're looking at the monthly chart, you can see it looked like a big dip on the monthly chart, and we're trying to regain this trend. Based on the last 12 years of trading, that actually confirms the idea of a longer term trading range even more. For sure, we can absolutely continue to all-time highs. In fact, the higher we go, the higher the odds increase of that happening. I think that a longer-term trading range still seems like a more likely scenario. So if SPY loses a daily uptrend, then our weekly lower high will likely be set, and we will probably pull back for some sort of weekly higher low and remain in some sort of trading range. Now, I'm not saying that's what's going to happen. I'm just saying that's what's more likely if SPY were to lose the daily uptrend and see bear follow through. Looking at the Nasdaq is much stronger than the S&Ps. As you can clearly see, we're really back to all-time highs, essentially. And we could still anticipate a lower high based on the all-time high, but it's all going to be about the big tech sector names. Apple, Microsoft, Amazon, Facebook. Those guys are leading the show. And as long as Facebook and Amazon are pretty much in blue sky breakout at this point, I mean, Amazon rejected its highs, but Facebook's in blue sky breakout. As long as we have tech sector names in blue sky breakout, then all power to the bulls, in my opinion here, just based on pure technicals. So you can see that Nasdaq could be trying to form a lower high, but a lower high will only be likely if we lose the daily uptrend. And in my opinion, in order to lose the daily uptrend at this point, I would say that is the more important pivot. We could pull back here, but the bulls would have space to work with above 88.55 to form another higher low. If we lost 88.55, that would be a notable shift towards the bears, and it would mean that we were consolidating and we'd likely stay in a trading range from there, unless we see a similar scenario where we lose it and then regain it, and then that's the same story over and over again. Look at the Russell. You can see how we're coming right up to the weekly exponential moving average here, the 26 period. And obviously, out of all the major sectors, the Russell and the financial sector are the laggards right now. And you can see that we're about 50% of the way back to where we were from the highs. And it doesn't look like a bad monthly chart. In fact, it's quite a nice chart. But again, zooming out to see that monthly chart definitely will give you a bit more perspective as to how a longer term trading range might still be more likely than shooting up to all-time highs. So you can see that we're up to this retrace now. It seems like a trading range would be more likely, but again, as long as we remain in a daily uptrend, then all power to the bulls. Again, we had the same scenario where we lost the daily higher low, we confirmed a daily trend change to the bears, no follow through, and then we continue to move higher. So as long as the first daily higher low was there, so generally as long as we stay above that, I would say bulls stay in control here. Okay, we're coming up to weekly resistance. Bulls stay in control here. So that's the Russell. Let's look at some tech sector names. So Apple, daily uptrend. Bulls remain in full control as long as we stay above 335. That is the last daily higher low. All-time high is pretty close, probably within a couple of percent at this point. Microsoft, all-time high within probably a percent or two at this point. 175.68 was our last daily higher low. If bulls need to hold that level to remain in full control on the daily time frame. Amazon, all-time highs, and pulling back from all-time highs. So we're trying to pull back for a daily higher low at this point. So anything above 2337.80 in my opinion would be a daily higher low, and after that it would be a 22.56.38. But generally, this consolidation looks relatively healthy. We did reject and we did see some selling, profit taking in late last week with a nice gap up open into the profit taking. But again, it's just healthy consolidation at this point, so no red flags yet. Facebook is an absolute blue sky breakout. So, you know, blue sky breakout tech sector names, all power to the bulls for the Nasdaq, absolutely. Look at that beautiful V-shaped recovery. Looks like nothing new. If you were here in 2019, that was pretty much the story of 2019. Every dip getting bought, and we pretty much went to new all-time highs relatively quickly. Facebook definitely formed a monthly higher low on this drop and is now continuing to all-time highs. On the daily chart, anything above 218, I would say, is a higher low. So bulls have plenty of space to work with. Tesla, this is an interesting chart because you can see how tight it's getting at this point. So we have our all-time high of 968.99 and we had our lower high, and then we came up here for this sort of lower high on the daily chart, which resulted in some selling. But now we're kind of creeping up here in this tightening range. So we want to look to see where this tightening range is going to likely break. And it depends on how you see it generally, but you can see that here we had our high, low, lower high, higher low, and we keep on tightening up in this sort of range. So we want to keep an eye out on the larger time frames for a break to see where this Tesla is going to likely go. So generally, line in the sand for Tesla breaking, we got 869 as our highs, we got 764 as our lows, and then obviously we got 683 as lows of that daily higher low. So keep an eye on Tesla, guys. It might be an indicator for market strength or market weakness. Tesla is not supposed to be correlated to the S&P 500, but something about it, I think it's because it's such a popular name that it has a psychology impact on the market more than an actual dollar correlation. Even if Tesla is not actually weighted in the S&P 500, it has a psychological implication on the price moves of the market, if you know what I mean. Looking at a name like Visa, credit card company, very strong, nice recovery, and we're in a daily uptrend. So in my opinion, anything above 173.82 is a daily higher low. And let's zoom out to the weekly, monthly chart. No red flags there, just all bull. We had a pullback for a higher low. So that's our monthly higher low at this point. Our last one was 121.60. Now we have 133.93. Weekly chart looking for some sort of a lower high, but we won't get any confirmation that a lower high is set until we actually lose the daily uptrend. Looking at a name like Shop, this one is a full bull right now. You can see we're shooting to all-time highs. Pretty extended on the daily chart, on the weekly chart as well. Very extended from our exponential moving averages. You can see how it tends to do that in the past. You can see we get very extended from our moving averages. It's very trendy, but now it's been more extended than before. So I can see why a lot of people are choosing to be short this name, either for fundamental reasons or for technical reasons. Daily chart, this level kind of looks out at me, 713.19 as a daily higher low. Anything above that is a daily higher low. If we lose that level, I'd say that the more likely scenario is some sort of a trading range or a lower high at that point. Because as you can see how we've been so aggressively moving up for our time frame, hourly time frame, and all the dips are getting bought pretty aggressively. So every time we entered into a trading range here, you can see that the dips were getting bought and then we just continued to move up. And this happens quite frequently in a bull trend, is when you'll get a pullback right to the low of like a crucial support area, and then it looks so bearish, but then the buyers come in at the last second and save the day, right? That will definitely trap out a lot of shorts. So don't get too attached to your ideas, guys. Don't get too focused on being short a name that's overextended or being long a name that you're trying to buy the dip or whatever, because anybody can come into this market at any time and change the trade completely, right? You never know. Let's look at oil real quick. So oil is very trendy, as you can see. So right now, from the ultimate dump that we had, we're now looking for some sort of a weekly lower high as opposed to that level, 28.93, about $30 approximately. Again, it's different on the futures chart. That's just the level on this chart, WTIUSD on TradingView. So looking for a lower high below that level on the weekly chart. Daily time frame is getting a bit extended, but we do know that oil is very trendy in both directions. So we can look at something like a 6-hour chart or a 12-hour chart, because commodities trade around the clock. I'd say that level stands out as being the more important level. So if we lose 24.45, we've now sort of confirmed a 12-hour downtrend, and that means that our weekly lower high is most likely set. Lastly, we'll look at NAT Gas. Take a look at NAT Gas. We have been selling off pretty aggressively on the weekly. You could say we're in a bit of a trading range with our low as 1,477 and our high of being approximately $2.52. So we're in a bit of a trading range here. So no meaningful action until we break in either direction. We're definitely not in a daily uptrend at this point. You can see how we had a daily trend change here and then it got no follow through, only to come back and grab that liquidity. So you can see that, I'd say if we get below our previous daily high or low, which would have been right here at 1,536, that means that we're more likely be going a little bit lower in this NAT Gas. So it's all about supply and demand generally. I don't really trade NAT Gas, but it's still a nice chart to look at, still an interesting chart to study. As you can see, over the long term, it's just been a steady downtrend for the most part here. We are into key monthly pivots here in terms of support. So if we do see a spike in demand, that means that we could see higher prices, of course, but right now it's very weak. So keep an eye on natural gas. If volume starts coming in and we start breaking above $2, then bulls can gain some momentum. But as long as we stay below the $2 area, bulls are not proving anything. All right, guys, so keep an eye on the big tech sector names, guys. So remember, market's not going to see very much weakness unless we are seeing massive selling in the big tech sector names. Remember, guys, the S&Ps are approximately 25% weighted in 5 to 7 different stocks. So we have about 5 stocks that take up about 20 to 25% of the S&P 500. So if you are trying to make a bearish assumption on the market based on the state of the economy, that is not exactly a smart thing to do when the Federal Reserve has unlimited power to print unlimited amount of money and the majority of the market is in 5 stocks that are unlikely to be affected anyways. I'm not a fundamentalist. All right, guys, if you enjoyed the video, leave a thumbs up and a comment, subscribe. See you soon, all right? Take care. Have a good one. Bye.